You feel like you should be investing because everybody says it's the smart thing to do, but the jargon is complicated, you don't know what to invest in, so you keep saying you'll do it later. If that sounds like you, then I'm a chartered accountant and I made this video specifically for beginners so that I can tell you the easiest way to start investing. The strategy I'm going to talk about is what the world's best investors are already telling us to do, and it's what I started doing years ago when I started investing as a lazy beginner. I'll put timestamps on the screen so that if you want to, you can skip ahead to the most relevant part of the video for you. What is investing? The point of investing is to make money. So the idea is that you buy an asset today and then you sell it at a later date for more money. And in finance, this is known as a capital gain. No matter what you invest in, you are always trying to make a capital gain. So you will always buy an asset that you believe will grow in value over time. As well as capital gains, our investments can also provide an income. Let's say that you invest in real estate. So you go out and buy a rental property. So the idea is that that rental property will grow in value over time and will make you a capital gain when you go on to sell it. But as you rent the property out, it will also provide you with rental income. Now that's just one example, but you can actually invest in lots of things. You can invest in company shares, bonds, commodities, and cryptocurrency, to name a few examples. You would invest in these with the expectation that they would make you a capital gain, but not necessarily an income. Why is investing important? Now you might be thinking that's all well and good, but why would I invest? It's just another thing for me to do. But there are a couple of main reasons why everybody should consider investing. First of all, investing helps to beat inflation. Inflation refers to the idea that goods and services get more expensive over time. So that means that our purchasing power decreases over time. So a pound or a dollar in 10 years' time will buy you less than a pound or a dollar would be able to buy you today. That's why a chocolate bar in 1980 would have cost you around 15 pence. But today, that same chocolate bar would cost you around 85 pence. That's all due to inflation. So if we just hold cash in the bank and it's not really earning much interest, in 10, 20, 30 years' time, that cash won't be as useful to us. But investing in the stock market has historically been the best way to keep pace with or even beat inflation. Secondly, investing helps you to create wealth. Investing will grow the value of your assets, which will mean that you will become wealthier. Whether your financial goals are to retire with a certain amount of money or to buy your first home, investing is more likely to help you achieve your financial goals. What can and should you invest in? Mutual funds, corporate bonds, government bonds, real estate, stocks, cryptocurrency, gold. The sheer choice and jargon is enough to put anybody off. But you can ignore a lot of it if you are a beginner. Most investors say that the easiest way to start investing is to invest in stocks through an index fund. And at this point, I'm going to highlight this is not financial advice and I am not a financial advisor, but this is what Warren Buffett advises. And if you don't know him, he's one of the most successful investors of all time. And this is what he has to say.
I recommend the S&P 500 index fund, and I've had it for a long time to people. And I've made it public. On my death, there's a fund for my then widow, and 90% will go into an S&P 500 index fund and 10% of treasury bills.
What Warren Buffett is saying here is that people should invest in the S&P 500, and that's an example of a low-cost index fund. A low-cost index fund is basically a basket of stocks that's made up of a bunch of companies that tracks the performance of a benchmark index. So the S&P 500 is one basket of stocks that tracks the performance of the 500 largest publicly trading companies in the US. Companies like Apple, Tesla, Amazon, and Microsoft are all in the S&P 500. So if you choose to invest in that index fund, you are effectively investing in all of those companies as well. So as these companies get bigger and make higher profits, you get to benefit from that as an investor. And that's how your money and your wealth grows as well. Why does Warren advise investing in the S&P 500 specifically? First of all, the average rate of return for the S&P 500 is 10%. And that's a very impressive rate of return for a long-term investment. Secondly, it depends on the specific fund, but usually investing in a fund means that your investments are diversified in some way, whether by sector or by region. So the S&P 500 is well diversified by sector because it includes stocks of companies in healthcare, technology, utilities, and energy. And a well diversified portfolio is a less risky portfolio. Thirdly, by investing in a fund, you don't need to start hand selecting stocks, which is very time consuming. So you don't need to sit and analyze hundreds of company stocks and try and figure out ways of buying and selling them, which would be unfeasible because of how expensive and how time consuming it would be. So this is low cost because it's an example of passive investing. You don't need to hand select your stocks. Instead, you just pick a fund to invest in, like the S&P 500, and then you get to invest in 500 companies by just channeling your money through one fund. And the fund itself doesn't need to be closely managed either because funds track the performance of an index. So it doesn't require a manager to sit and closely watch what's happening and to buy and sell stocks. So that means that the management charges will be minimal, which is good news for you as an investor. In fact, many investors try to beat the S&P 500 through actively managed funds, but they often fail to do so. But it's not just the S&P 500 that you could invest in. There are other low-cost index funds like the NASDAQ 100 or the FTSE 100 that you could look into as well. Common questions. How can I start investing? So if you want to start investing in funds, you just need to set up a brokerage account with a broker. I use Vanguard, but there are other ones that you could use, such as BlackRock and Fidelity, and it will just take you a few minutes to set up an account online. You can then pick which funds you want to invest in and set up your payments. How much money do I need? There's a common misconception out there that you need thousands to start investing, but that's not true. With Vanguard, you can invest with a lump sum of £500 or £100 a month, and most people should be able to do that. Do I need to invest consistently? It's a good idea to invest a little bit each month rather than at a single point in time at a single price point. When you invest regularly, you lower the risk of investing at a time before the market price drops. Let's say that you invest $100 each month, and one month the share price is $10, so you get 10 shares. But the next month the share price is $50, so you only get 2 shares. Over a long period of time, you may end up with more shares than if you'd invested at a single point in time when the shares were more expensive. This is known as dollar cost averaging, and it's a simple strategy to manage price risk when you're investing. Then you will need to hold your investment for a long period of time so that you can benefit from compound interest. Compound interest is the idea that interest earns interest. So when you first start to invest, you will earn interest on the principal amount that you invest. You will then start to earn interest on the principal plus the interest, and this will keep compounding. And that compounding growth is really powerful to helping you to build wealth. So much so that Albert Einstein called compound interest the 8th wonder of the world. If you want to know more about this, I will leave a link on the screen to a video I made all about compound interest. Thank you so much for watching. I hope you liked the video. If you did, then please give it a like, and I'll see you next week.